Hello, everyone. Thank you for clicking our YouTube video today. Welcome to the Alumni Association webinar. This one will be on ABLE accounts. I have Lauri Maloney here, who's the Director of ABLE Savings Planning, Advocacy, and Growth, and then Lauri Lamphere, who is the ABLE Client Relationship Administrator. So today they will be taking over, and I just wanted to introduce them and say thank you for clicking on our webinar today. And if you are already a member of the Alumni Association for Project Search, then you can do so by clicking in the description, which will lead you to our webpage. And then there you will input your email address and your name and where you graduated from. And that's just information for us to have on our end, and then you will get our emails on a regular basis. So I will turn it over to them. Thank you.
Thank you so much. So I am Lauri Maloney. Nice to meet everyone and welcome. Today we'll be reviewing everything you need to know about ABLE. So let's get started. All right. So what is an ABLE account? So an ABLE account is an account that it's a saving and investing account, giving those with disabilities the ability to save more. So you can see here that it's a tax-free account. So for those with a disability and their families to save for expenses related to living with a disability. What's great here is there are 51 ABLE programs across the country, and that over 234,000 people already have an ABLE account. And what's even more amazing, that they've saved more than $3 billion. So why is an ABLE account so important, right? So what's great is it protects current benefits and quite a bit more. So the first thing is it helps to save while preserving benefits. So such as SSI, SSDI, Medicaid, HUD, and others. So the really important thing here is if you do have SSI benefits, those are preserved for as long as you have just up to 100,000. That's the account balance limit for ABLE accounts, right? So there's no Medicaid asset cap. There's no impact on HUD, SNAP, and any other benefits. What's great here, and we'll talk a little bit more about this, is the benefit from tax-free earnings and withdrawals. So for all these, what we call qualified disability expenses, that those will be tax-free. So when you withdraw that money, right? So, and then the third thing is, and this is a question we get quite a bit, which is it's also an alternative or an add-on to a special needs trust, right? So these two truly are complementary to each other. The special needs trust, it is much more limited in terms of the type of expenses that you can use that for. Versus the ABLE account, it takes a little bit longer to go in and get that money. The ABLE account tends to be, you can get that money as quickly as you need it, right? So, but once again, they are both very complementary to each other. So who can own an ABLE account? So a person is eligible to own an ABLE account. What's great is if you look on the left-hand side, that their disability was present before the age of 46. Now that's new for 2026. It was 26 in 2025. So this is great news for everyone. So you need to ensure that the disability was present before the age of 46, plus one of the other things that you see on the right-hand side. So the first one is eligible for supplemental security income or Social Security disability insurance because of blindness or disability, or have a medically determinable physical or mental impairment with marked severe functional limitation that has lasted or is expected to last at least 12 continuous months, or have identified the condition on the Social Security Administration's list of compassionate allowances condition. So keep in mind, disability was present before the age of 46 and one of the others on the right-hand side. So who can open an ABLE account? So it doesn't necessarily have to be the account owner. And this is what's really important that we like to share with everyone. You can see there are 3 different types here, right? So the first one is the account owner. So that is the person with the disability, with capacity, and they manage their own ABLE account. The second one is an account owner who appoints a power of attorney. So it's the individual with capacity who appoints someone as their agent or power of attorney to really help manage the ABLE account. Or the third is an authorized individual. So it's someone else who may be able to open and manage that ABLE account on behalf of the account owner. And it falls within priority order. So they start with power of attorney, guardian or conservator, spouse, parent, sibling, grandparent, and then representative payee appointed by SSA. So what we want to remind people of is no matter who opens that account, the eligible individual is the account owner and that they can only have one account. So how much can be saved in an ABLE account? So once again, some great news. Last year in 2025, it was 19,000. This year it has increased to 20,000 that can be contributed into the account each year. So that's really important. That's different in terms of 20,000 per year with a total account balance limit of $100,000, right? So those contributions can come from any source. Friends and family can help put money into the ABLE account, for example. And like we said, if you are receiving SSI benefits, the total ABLE balance limit is that 100,000 amount that you can have in total, right? But if you're not receiving SSI benefits, what's great here is the total ABLE balance limit. It varies by state and it's significantly more. So if you see here, the range is from 235,000 to 596,000, right? And like I said, that really varies by state. So in this blue box down at the bottom, what is great is that for those that actually work and they do earn an income, whether that is full or part-time, they actually can contribute beyond that annual $20,000 limit. So I'll talk about that in a moment, but that's wonderful news. So what is the benefit for working account owners? So there are two pieces to this that you really need to take in consideration. And over on the left, the first is if you are not contributing to a workplace retirement plan like a 401k, for example, right? You can contribute additional money into the ABLE account above and beyond that 20,000. So, and if they look at it as equal to or lower than what you see below, the account owner's annual gross wages, or the U.S. Department of Health and Human Services poverty guidelines. And right now that's at $15,650. So what's good is I'll talk about this and review examples over to the right in a moment. So the second piece is if you are contributing to a workplace retirement plan, then you can't put in additional contributions. So for example, if it's a defined contribution plan, an annuity contract, or an eligible deferred compensation plan, you cannot put additional in there. So let's look over to the right, right? So you can see you have Kim. We'll start with Kim, right, as our first example. She does work. She's earned $4,000. That's definitely below that poverty level of 15,650. She is not saving for retirement through work. And so she's able to take that full $4,000, right, and contribute additional into the ABLE account. So that's the $20,000 plus the additional $4,000 that she has earned for a total of $24,000. So the second example is Sue. Sue works also. She made $20,000. Her earnings are above the poverty level. And she is saving for retirement through work, which means she now can't contribute anything additional into the ABLE account. So her maximum is $20,000. And the third example is Joe. So Joe has earned $25,000. It's above the poverty level, but he's not saving for a retirement through work, which means his maximum additional that he can contribute beyond the 20,000 is 15,650 for a total of that 15,650 plus the 20,000 that he can normally put into the ABLE account, which would amount to $35,650 that he could put into the ABLE account for the year. So, who can able savings be used for, right? So, it's quite frankly virtually everything. And that savings can be withdrawn, like we talked about earlier, tax-free for any expense that is incurred as a result of living with a disability, because the intent is about improving quality of life, right? So, it doesn't cover everything, but it covers quite a bit, right? So, if we look at the qualified disability expenses, it would cover education, housing, transportation, employment training and job coaching, assistive technology, personal support services, health, prevention and wellness, financial management and administrative services, legal fees, and so on. So, for example, if somebody wanted, they said, "Oh, geez, I need to purchase, a van, right? And I'm in a wheelchair, for example, that would be covered. Or I would like to purchase a home, that would be covered." So just trying to give folks some examples. Okay. So I am actually going to turn this over to Lauri Lamphere as she'll continue discussing the ABLE account. Lauri?
Thanks, Lauri. That was really enlightening. I loved just the excitement that came from our age of onset increase to age 46. So more people are eligible now for an ABLE account. I'm really glad you pointed that out. So you might be there and you might live anywhere in the United States. So your question is, which ABLE program am I going to enroll in? If you saw on one of the first slides, there are 51 ABLE programs out there for you to choose from. So ABLE plans will all work in the same way, where you save funds in the ABLE account at a tax-free advantage, and you can use those funds for your qualified disability expenses. So, but there are, so that is the main focus. That is what an ABLE account does. But there could be some differences depending on the state plan you might choose, or the ABLE plan that you choose. And so they could be different when it comes to cost, the investment options, ways to contribute, and how to access your savings. So just to break that down a little bit, the cost. ABLE plans generally have maintenance fees. Some programs will assess those maintenance fees quarterly, while others might have an annual fee. It is a small cost charged or assessed to the account. The other thing that you want to look at is investment options. What kind of portfolios do they offer? As well as, are there any FDIC insured options that you can choose from? Or maybe even, we'll talk about this on the next slide or two, but maybe even an investment option that is FDIC insured with a debit card for ease of using the ABLE funds. You want to think about, how does this plan allow you to easily contribute into the account? Most ABLE plans will allow electronic transfers, or if you'd want to contribute through your payroll, so a payroll direct deposit, gifts from family and friends. So that is another nice feature about an ABLE account, that friends and family can contribute. So you want to look at those things on how convenient it is for your family or you to be able to contribute to your ABLE account. And now, once you've contributed, you might want to use those funds for your disability expenses. So how do you access your funds? That's another thing you want to think about. So many ABLE plans that you might look at will offer funds transfers, which means that we can electronically transfer funds back to whatever bank account that you decide. Again, that checking account option, some plans have a debit card or prepaid Visa card with their program, and that is another way to take funds out of your ABLE account balance. But I do want to let you know, no matter where you live, I would recommend that you always start at your state to check to see if your state offers an ABLE plan, because many states offer tax advantages and incentives for saving in the ABLE plan. So there may be tax deductions. So that, I do recommend that if you are opening the account for yourself and you're planning on contributing, it'd be a nice way to take advantage of your state tax benefits. And also others who might contribute may also qualify for those same state tax benefits if they reside in that state. Some states may also have residency requirements, although I would say 90% of the ABLE plans out of the 51 of them, most of those plans, it doesn't matter if you live in another state. You could open any state ABLE plan you choose. So now that we have some information about how to use your ABLE account and what to think about before you open it, you want to think about some additional how you would like to use your ABLE account, okay? And what kind of disability expenses are you saving for? Lauri went through the list of general qualified disability expenses. Again, it's so important to say that that is just a list put out by the IRS, which kind of outlines what might be considered a qualified disability expenses, and mainly it's anything improving the quality of your life. But what expenses are you saving for? Do you have ongoing expenses, maybe like bills that you pay regularly, and you want the funds easily accessible for you on a regular basis? Are you saving for a rainy day? Maybe sometime down the road, you don't really know what you're using your ABLE funds for, but you're going to save it and have that for a rainy day. Or are you saving for a more expensive, larger item that takes sometimes a longer time to save up for? And that might be something like an accessible van, possibly anything like an assistive device, like possibly a wheelchair. But are you saving for something? Do you have a long-term goal? And the other thing is you could save for any of those things in your ABLE account for any of those reasons. You could save some for a rainy day, you can save some for immediate use, and you certainly can save for those bigger expenses that you might have. So when are you going to need the money? Again, expenses that you're going to need to pay within the next several months. Or are you thinking 1 to 3 years you're going to need to use your money, or even longer? The other thing is, and we'll get into this on the next slide, but we mentioned that when you enroll in an ABLE account, you need to choose investment options. What is your risk tolerance? So your risk tolerance really is, how do changes in the financial markets affect what I want to use my ABLE funds for? We can get into that more on the next slide. So here, this is a typical ABLE account. Again, plans are different. They may have slightly different variations or choices of funds that you can choose from, or investment options that you can choose from. As you see here, that we have ranging portfolios that are anywhere from aggressive to money market. So if you are more tolerant to risk, you would have more potential to earn, but you also need to know that you may lose more funds. If you don't want to have any kind of risk at all, there's a money market option, which is not FDIC insured, but it is one of the more conservative investment choices. And then we have the checking option, which is FDIC insured. So, and that's going to kind of go hand in hand with what your long-term spending goals are, or your saving goals and spending goals. And that is something that you will be choosing when you open an ABLE account. If you could go to the next slide, Lauri, thank you. And here, just to give it a little bit more definition to when we looked at that investment option screen prior, there are some hypothetical investment strategies, and we have some examples set out here. So somebody might want to, John wants to save for a new computer this year. And in that, he might not be comfortable with the possibility of his value of his investments going down between now and the time he buys his computer. So John's risk tolerance could be described as low. And based on his needs, timing, and risk tolerance, John is considering a conservative option, or maybe the money market option, or even the checking account option. So those give him low risk. Those are good low risk investment choices. So when he is ready to buy that computer, he has stability of the value in his account now is more likely not to decrease in value due to any stock market fluctuations. And now we have Anne. Now she wants to buy a wheelchair in a few years. She hopes to see the value of her investments grow steadily so that she can pay for her new wheelchair. And she understands it's not guaranteed because, again, any investment option choice that is not FDIC insured carries some degree of risk. But Annie's risk tolerance could be described as moderate. Based on her needs, timing, and risk tolerance, Anne is considering either the growth option, the moderate option, or the moderately conservative option. So she really hopes to have some growth. Those investment choices tend to, have a greater value over time. And she does realize it's not guaranteed, but she has a little bit of tolerance for that, those ups and downs of the stock market. And here we have Lisa. Her parents are investing funds for her in the ABLE account to use after she finishes high school. So Lisa's parents' goals are more long-term. Lisa's parents, they're comfortable with potentially big swings in the financial market and know that prices may fluctuate a lot over the long term. But because she is still in high school, their tolerance could be a little bit more. They're more tolerant of any ebbs and flows of the stock market. And so they could invest in something a little more aggressive based on their needs. And in that, if they are going to invest into something a little more aggressive, they can always opt into the aggressive option or the moderately aggressive option. And how to start saving. So we know we're going to open our account. We're going to, we want to start saving for our future, regardless of what you're saving for. But what can you expect when opening an account? You can open an account online. So whatever state plan you choose, they would have a website for you to go, and you can choose to enroll your ABLE account online. But some people, like myself, I like to take pen to paper and use a paper form for some things. And you also can be provided a paper form or download a paper form on the websites. Once you're there and going through the enrollment, just know that you will have to certify that you meet the eligibility criteria that we talked about earlier on. You're going to need to provide some basic information such as, your first and last name, the authorized individual's first and last name, and not only name, but then address, date of birth, social security number, email address, and phone number. So it's nice to just expect that and keep that handy while you enroll. You also have already researched your investment options, and now it's time to make your investment selection. So you'll be doing that during your enrollment, whether online or on paper. And you're going to make an initial contribution. Do you want to provide your checking or savings account that you have at home so that you can make an electronic contribution when you enroll? Or are you planning to send a check in? Both are fine. Or you can, again, sign up for payroll direct deposit and even Social Security direct deposit. And then lastly, you're going to accept the terms and conditions. We may need additional documentation for identity purposes, but at that time, if that is the case, the plan would reach out to you and ask for that documentation. So when you're saving in your ABLE plan, you have your ABLE plan, you're starting to save, you're slow and sure and steady wins the race. It's getting there. But you have an account with funds in it for you to manage. Really important, you want to keep your records and receipts. And on one front, you do want to keep at home a diagnosis or a benefits verification that shows that you are eligible for an ABLE account. So basically you meet the criteria, the age of your disability was onset prior to age 46, and you're receiving either Social Security or Social Security disability, or even certifying that you are eligible for the account. You also want to keep track of your withdrawals and your qualified expenses, meaning you want to save your receipts. So when you are purchasing for your account, keep your receipts somewhere handy, easily accessible. They really are for your record-keeping purposes. We're not going to ask for you to send in receipts, but they're good to have at the end of the year to show if you were ever to be audited, you can show that, yes, those funds were used for qualified disability expenses. And keep in mind, if there happened to be a non-qualified expense, the earnings portion of that withdrawal would be treated as income. So it would be taxed at the account owner's tax rate and would be subject to a 10% federal tax penalty and applicable state taxes. Another thing that you may want to keep in mind, especially when you're choosing your investment options, you can change your investment choices twice a year, meaning if you invested in, let's just say, the aggressive option and you don't feel that it is serving your needs, you can make an exchange and you can move those funds that are already invested in, say, the aggressive to one of the other options available to you twice per year. And if your eligibility for an ABLE account ever does change, please contact your ABLE account plan. Again, important. You have to start somewhere, right? Start saving. Consistency is key. You can start small and be consistent. We talked about the maximum ABLE account balance for those receiving Social Security is $100,000, but it sounds like a lot, but it can go quickly. And don't wait until you're older to start saving. Do it now if you can, and invite your friends and family to help you save. Here, if you'd like to take a look, we have some additional resources for you. There are some, really wonderful websites out there that give you more information about ABLE that we could go over here today, but also comparable state plans for ABLE accounts, etc., so that could help you make your good choices. And thank you.